Welcome back, Mobile Home Park Nation. Here today we have an actual on-the-job learning experience. I am training some of our new staff how to use Rent Manager. So I figured might as well record this and you guys can learn to use Rent Manager as well. Every month we do bank reconciliations, and then we do profit and loss reports, balance sheet, trial balance, summary rent roll, maps, all that kind of stuff. I'm real involved in this process, but due to workload, I've hired a CFA who's going to come in full time and be my in-house financial guy and guru. But for today, I'm going to teach you guys some Rent Manager. Rent Manager, you're looking at the home screen here. It's got all kinds of tools. This is like QuickBooks on steroids. Today, we're mostly playing with the accounting, which is bank registers. They got a bank register stuff here. This is one of our projects. And then you've got all these other reports. There's a gazillion reports in this thing. Rent Manager is an amazing tool. I don't get paid to say that. I pay them actually. Maybe I should start taking sponsors, but we pay Rent Manager. It's like $325 a month. That includes like 2 or 3 user accounts. Every time you add a new user account, it's $75. There was an onboarding fee of like $2,000. They do a lot of important stuff. It's not based on per units like some of the other ones, like maybe Building or AppFolio. It's just based on a fixed fee. And I've got a lady, Chris, that does a lot of entry for me. Kristen does a lot of the entry and some of the initial stuff. I've been doing bank recs and P&Ls and stuff, but I'm handing off some of that work. But today we're going to look at one of our properties. I'm going to just use this property, Peaceful Homes in Belton, Missouri, because I did another video on that, on a kind of our infill project. So we'll focus on that one for today and the recording. So there's several people on the line who are all internal to my company, so they may ask questions. The rest of y'all are just going to have to listen to the recording. So sorry, not sorry. So first, we're going to start off with financial statements, and I'm going to talk out loud. I'm going to go financial statement, profit and loss, and I'm going to select. Today, we're going to look at 3 properties. These are all related: Belton Homes, Belton Land, and Belton Investors. I'm going to select the month, October. I'm going to separate by properties, and that way they don't all show up at once. I'll do it. I won't separate for a second. You'll just see how messy it is. It's like, okay, you got 3 of them at once. They're all jumbled. So we're not going to do that. So we do report, financial statement, profit and loss, Belton Homes, Belton Investors, Belton Land. Belton Investors is the parent company. That's where my investors put in cash. And then the 2 wholly owned subsidiaries. The land owns the land, the homes owns the homes. Pretty easy. So Belton Investors has minimal transactions every month, frankly, because it's just a holding company. Gives their distributions to investors. Okay, so October, separate by properties. View report. We'll go look at investors first because it's easy. Okay, investors had no money, no revenue, and $25 of expenses. What are those expenses? We paid First Bankers Trust, fee for 5 times ACH, because we sent out a $100,000 distribution that's beyond the normal pref. So the pref is set up on a regular ACH. They don't charge us for that. The $100,000 extra, we had to set up a one-time ACH for that amount. I say one time. Hopefully it's every month, right? So we had to pay a fee. Pretty simple. So what I do next, I just email this, send via email. This one's done. There's nothing to it. I put in my email, and then right there, and I just call it B Investors PL. And then later on, that'll end up in part of an investment report. There we go, send email. I'm gonna move my controls here. My little Zoom controls are slowing the pace of progress. Okay, now let's get into something with some real meat. This is Belton Homes for the month period. So what I do as part of my monthly reviews, I look for abnormalities. So I say, wait a second here. We got rental income. You know what? I'm going to switch to land because so for you guys learning, because land is easier. So we don't have journal entries for home transactions. We'll do homes last. So for land. So we got rental income. This park has $29,000. If I drill down on that, it'll show you exactly who paid and what, got late fees, etc. I'm not going to do that right now because there's some tenant names in there and stuff. So just for some more privacy. Credit for work services. Somebody did some work for us that lives on the park. So we just gave them a reduction in rent. Water and sewer revenue. That's the revenue we receive from billing back water sewer, which we submeter. You'll see down here in expenses, we have an expense of $9,097. So That's either we lost some for common area leaks, but really that's probably just an overlap of we paid last month's bill. You pay in arrears, so the water bill changes from month to month. So we probably paid right here last month $9,097, but we brought in 7,896. We collect, really close to 100% of water sewer because we have leaks, we fix them. And these are actually nice PEX water lines that are 5 or 6 years old, so we don't really have any leaks at this park. So that's the revenue. Resident prepays. This is kind of a rent manager nuance. It's kind of a pain. Basically, somebody pays in advance, and or the rent is just allocated. Like if they've got a shed rent, a pet rent, a late fee, home rent, or in this case, land rent on Belton land. Rent manager kind of does like a FIFO accounting, first in, first out, where they attach it to different charges. So it looks like prepay. It's probably not people actually prepaying. It's kind of a de minimis amount. Management fees. This is what puts my kids in private school, frankly. So this is the best part. That comes to the home team. My management fees on this deal, I take, it's a calculation, APM, Augusta Property Management. That's my management arm. It's the gross rent. No, you can't see the detail there. Here it is in the memo line. It's the gross rent of 29,993.16 times 5%. Basically, I get 5% management fees. Advertising, we normally don't have advertising. This must be, it says signage, banners, flags. We must have ordered some road traffic signs. Okay, is that signage? I could call that signage. This is kind of subjective on, is that signage? Is that a land improvement? It's not really the same as typical signage, but frankly, it's not that much of a difference, or it doesn't matter that much where I put it on and stuff like that. So I'm just gonna leave it there. Landscaping mowing. So this stands out to me. This is a big expense for October, $659. So I'm like, what's going on here? So I look into it. Tyler. So Tyler's one of our contractors. We allocate some of his time to miscellaneous repairs expense. Depends on what he's working on, which would be down here. It's 5109, which we don't really have much of on the land. I mean, on the homes, it'll come up a bunch. That landscaping is probably attributable to him putting in driveways or mulch or something like that. That's kind of an internal allocation based on his time card, which we're not going to get into today. Life insurance expense. So this is a recourse note, and the bank was a little worried if I get hit by a bus, who's going to pay? Who's going to stir the straw or be the straw that stirs the drink, if you will. So apparently they thought that was me. So I got $1 million life insurance policy that this partnership, this LLC, pays for to protect the bank, and that was a loan condition. Okay, we got supplies expense minus 200. I don't know why it's minus. This guy Eric, we painted this guy's house, so we already paid the supplies expense for paint, and we're billing back, over a couple months. So good deal, Eric, on the good team. Electric, this is for the street lights, and we have an office. Garbage, this is a monthly expense. Sometimes we have a garbage temper expense. Those are the roll-off dumpsters. Total utilities, office expenses, that's just our internet bill. E-pay processing expenses. This is for, Rent Manager has a e-pay system called Zago and Paylease, and we can charge fees. That'll actually be billed back to the tenant somewhere else, it's baked into the rent, but it's a different breakdown. Mortgage interest expense in this case is $3,262. So we have a net income of $21,170. On page 2, we have the gross income of 37 and change, expense of 12 and change. NOI, net operating income, is 24,832. But then we take off the non-operating expense, which is the mortgage interest, and that's our net income. So our NOI, for purpose if we were to sell this property, if this was the same every month, which is not obviously, 24,832, we take it times 12. The NOI for this property is roughly $297,000. If we're to sell this at a 7 cap, that means the property's worth $4.25 million. It's not for sale at a 7 cap, so don't call me. But by the way, we bought this for $1.25 million 21 months ago. You think we're doing a good job? Hey, shout out to Austin, who's on this call selling homes. All right, Austin, I told you I'd remember you in my will. That was it right there. You just got a shout out on the MHP Lawyer podcast. This is fun. Now we're gonna go to Belton Homes. Yeah, yes, you say I never give you anything. Austin is not for hire. He's actually a convicted sex offender, drug dealer. He's been bankrupt 10 times. I'm kidding, but don't poach him from me. That's why I'm not showing you his last name. Anyway, now we're going to the Belton land. I would normally forward it on and say I'm done, but it could change based on Belton Homes. So I'm not going to say I'm done with Belton Land. Belton Homes, this is where the magic happens, guys. Not really. Nobody likes park-owned homes, but they're a necessary part of the game. So park-owned home revenue, we have some rental homes. We have some homes that are in, either a rent credit or other arrangements. Sometimes a contract for deed, sometimes a lease. We don't want to do lease to own, actually. Contract for deed. And I've got a whole podcast on the pros and cons of that. You got to, if you do contract deed, you got to be super sure to not take advantage of tenants and follow all the rules and everything like that. So we got pet fees, NSF fees, it's for bad checks, late fees, credit for work services we covered. Normally I'm looking for stuff that's odd. These are all normal, and I kind of have a good feel for what our revenue is and expenses. I know, like our electric bill in the last one, I know what our electric bill is because I look at it every month. If it was $800, I'd be like, what the heck? If it was $200, I'm like, well, why we get a deal? It's always around in the fours. Resident prepays again. Miscellaneous income. Okay, this is going to be the confusing part of the deal here. Reimbursement income, that's when people reimburse us for the property taxes or insurance that we would pay on their behalf on a contract for deed. So it's not really, it is income, but we're paying the expense down here baked into liability insurance building expense. I'm going to put a pin in this MH sale profit loss net of MH basis. I'm going to put a pin in that till last because that's the confusing part. Insurance policy cancellation refund. We just got a big refund check. What does it mean? Does it mean we quit having insurance? Yes, we're cowboys. No, it means we sold some houses and we paid for the whole insurance up. We paid $600 for insurance up front, and we sold the house 2 months later. We get a 10-month refund, and we use shelter insurance for this property, and sometimes they do it in batches. We don't get the money till 2 months later. So this is not 1 month of insurance. It's just that's when we got the check. Management fees, like I said, this is going to the home team. This number is bigger. So why is it bigger? Because this also includes, we have a full-time manager on this. This also includes manager salary, which goes to me as the Augusta Property Manager, as the management company, and then I have W-2 employees that work under that company. So it comes into my company, but then I don't make money on that. It goes out the door. But I also have 5% of gross revenue, which is profit, which covers the bookkeeping staff and things like that. Advertising, I'll see what advertising is. I used to not see. We almost don't ever pay for advertising. Okay, the city. Andrea here, she asked me to give them a check for the mayor's Christmas tree. So this is a legal kickback. Just kidding. Well, it's actually just we want to contribute to our community. So the mayor's got some fundraiser goes in charity. Christmas. We paid $100, and rather than me pay it out of my own pocket, this LLC is paying because that's the LLC that wants to contribute to the community rent. Landscaping, mowing, we got minus. That just means we took back something, or this payment was allocated, so somebody paid us to mow their property. That's what that was. Sometimes we force mow, and that would be a fine, like a late fee. Some people say, hey, my mower's broke or I'm busy. Can you mow? We don't really like to do it, but we do it just to make the park look nicer. Building expense, liability insurance expense, building insurance, liability insurance, miscellaneous repairs. This one is messy. So I want to just look at it. $3,000. What do we got in there? Okay, we got some laborers here. I pay them out of Augusta Property Management to do labor, miscellaneous labor, like home repairs and so on. So we can look at this check here. Here's what we did, reimbursing for certain checks for these guys. The LLC is paying Augusta Property Management. I do it through Augusta Property Management because that's the entity that has workers' comp insurance and general liability insurance. So all the laborers get paid out of my management company. But if my management company is benefiting the Belton investors or Belton Homes in this case, I want to be reimbursed. So I break even. And then I get charged like 2% premium on work comp. So at the end of the year, we get audited. You get you get audited by the IRS like once every, maybe never. You get audited by your workers' comp insurance company every year. Everybody does, and they tell you if you paid enough premium because you say I'm estimating I'm going to have $250,000 of payroll, and it's $50,000 bookkeeping, $200,000 labor, and they give you a premium. At the end of the year, they want to make sure if you spent $500,000 in payroll, they're going to send you a premium adjustment of double. So I then divvy that up pro rata based on the LLC that you could benefit, in this case, Belton Homes. And it's easy to do because we give them 1099s to all these guys. So I know what their share was. So we've got make ready items. So this is under miscellaneous. So this is the Home Depot. So these are supplies, but they're not supplies like printer ink, like office supplies, and they're not supplies inventory like this one, storage shit. That's categorized as equipment, machinery. Um, that's probably valid. That's not going to show up in our profit and loss. It's going to show up on a balance sheet, so you're not going to see that $2,100 in here. Miscellaneous repairs, make ready. That's things like smoke detectors, blinds, light bulbs, all that kind of stuff. You got deck wood, and we allocated to the unit. This unit we allocated this much deck supplies and wood, and then all these other homes and so on. So Kristen usually pre-allocates this for me. I'd like to see everything attached to a unit. So that goes into our balance sheet. I'm going to attach this to 179. Some of this it all works out in the end, so to speak. So it's not, I don't know exactly which use this is for, but I don't have it naked, or it's going to make our dispositions of individual homes inaccurate from an accounting standpoint. And I know 176, 181 are new homes. So I know they had these supplies. So I already just allocated 176, 179. So now I got to do 181. I'm not going to allocate 144 because that was a home we sold, but that home was already in the park and it was already occupied. So we didn't really spend that much, obviously, on make ready. So I always drill down on 5109. At some point you start to memorize all these. 5200, this is supplies. I typically review this one because sometimes stuff is miscoded and it should be office supplies. So these are payments we reimbursed from these guys. It's negative. I don't remember what that was, to be honest. Let's think about it. We made 150 for materials. Austin, what did we pay for these units?
Say again?
Excuse me?
What did we pay for?
Yeah, for 124 and 125, we're being reimbursed $50 a pop, and it's in this category. I feel like that's.
It's going to be driveways.
Oh, okay, got it. We put gravel driveways in for them, and we charge for driveways $100 a stall for gravel. We put nice landscape timbers around them. We just try to break even. We don't make any money. We probably lose a little money on that, but that's what that was. Okay, thanks, Kristen. And then if we do concrete driveways, it's like $1,000 a stall, and we just outsource that to a pro, just because it's a mess. Do it yourself. We got a couple guys on the team that know how to do it, but it just ain't worth it, frankly. Water, sewer expense. So here's how the homes work. So if we have a rental home and the rent's $900, of the $900, we have lot rent. So that's down here, lot rent to lessor. So we transfer, in this case, I'll drill down here, transfer lot rent from Belton MHP Homes to Belton MHP Land, 33 POH. So we have 33 POH in this park. And that's a combination of contract for deed and POH. We actually have, Kristen, you just sent me that site map, didn't you? Pull up that site map here. I don't think I saved it yet. Peaceful homes. I'm getting this up here. You sent me that site map, right?
Yes, I sent you everyone's. I can resend if you need.
Oh, it's because you put them all in the same email, I think.
Yeah.
Send me the whitelisted site map. Here it is. I put them in APM because you sent them all in the same email, where normally if you send them a la carte, I'll put it in the Peaceful Home subfolder. Okay, so here's this park. Well, might even remove the legend. You whitelisted the legend even. So I remember though. The purple, light purple are contract for deed. The pink are tenant-owned homes. The green are rentals. So I looked at it the other day. It's like, because we're under 25%, which is huge for we're going to do a big refinance with Fannie Freddie. The bright purple, these are homes that are en route, are ordered. This is an Adventure Nevada. That's an Adventure Nevada. This is a True Satisfaction. It's a True Satisfaction. This is Adventure Nevada. We like the Adventure Nevada because they have a really nice planter box and hitching elevation. So you'll notice those are strategically on the corners, and we got one over here too. And then I got one coming here at 112. It's under contract right now. So this park is 93 spaces. It looks like we're at 91 full. We're not, because the coming soon. We got 5 coming soon. So we're at about 86 out of 93. I got to order this one for 114. We should be full first quarter 2021. And then we're going to initiate our refinance April 1. Our lot run is 375. We're going to push it to 400. And then we're going to refinance. Market lot run is over 500, by the way. So we got a lot of room to grow. And doing great work here for our residents. Okay, where was I? Back to my little zoomer here. Okay, rent manager. Here we go. So we transfer the money internally. So that's 33. So sometimes I'll just do the calculation to verify that Kristen or Chris did it correctly, and it is 12,000. They almost always do 12,375. So that money is lot rent we're paying from the left hand to the right hand for accurate bookkeeping. And then we do the same thing with the water. So these tenants get individualized water invoice every month, and we capture that in the Belton Homes and we transfer it over to land. So then we got to get some payroll processing, security patrol. That's unique to me. We don't really have security patrol. I bet just the cameras. Yeah, we bought security cameras for the office. So I got to figure out if security control is the best account. Over here under accounting, they have chart of accounts. This is your standard GAAP chart of accounts. Well, I added in all those checking accounts actually because those are per each property, and I got some stuff with investors and all that. So I'm going to go down to the expenses. Which are at the 4,000, expenses are 5,000 level. So I'm gonna look at some of these expenses here and see what's better than security patrol. Because it's really not, it's really more equipment, but it's security related. So that's probably why Kristen or Chris classified it as such. It doesn't really make a big hill of beans. It's the same money going out the door. I just try to be as accurate as possible. You could argue those are telephone services. Sometimes software. We'll probably keep them in their security because that's what they're for. And but some of these we created. I had to add these. So for example, all these like bad debt was in there. Oh, bad debt, defaulted loan, bad debt, adjustment to expenses, title transfer fee, government inspection fee, petty cash, HVAC repairs. We wanted to do HVAC separate than the rest of the supplies because I wanted to monitor it. Staging furniture, security patrol, mobile home tax bill, miscellaneous permit, mobile home transports. These are things that Ram Manager somehow doesn't have. I don't know how. There's got to be other guys like me out there who are frustrated with the generic line items. The big one is 5004, which we'll get into here in a minute. And this is tracking the profitability or lack thereof on home sales. So I don't see it. I'm pretty sure it's 5004. It must have been moved around. It's not in sequential order. I don't want to jack with you.
It's under income.
Isn't it 5004 though? We put it in there. That was the number because at the time it was an expense, but it's an income classification. Okay, that makes sense. So I'll leave that as good, but that's what I do every month. I drill down. So for the rest of you guys listen, that's how I drill down to watch these. I'm gonna go to page 2 and NOI of 12,000 interest. We have minimal interest. We have a line of credit with Hawthorne Bank in Belton, Missouri, and they let us buy the homes. We sell the homes typically through 21st Mortgage, but Hawthorne doesn't want to finance the end buyer. They'll finance me. They have the land loan on this too, so they finance the park, and they've seen that their LTV went from 80 to 30 in the last year, so they're pretty warm and fuzzy. So I ask them for a line of credit because they're cheaper than 21st Mortgage on the acquisition side. So now we're going to drill down to miscellaneous income, 4999. There it is, 5004. I knew I was not crazy. And I titled this MH, or mobile home sale profit / loss net of mobile home basis. So it says this month we made $8,762 on mobile homes. That's probably not accurate because it includes, we'll see, but typically there's things like down payments or things that are from, if we get a down payment this month for a house that's coming in 2 months, it's going to make it look like we're artificially profitable today. But that'll ultimately be worked out when we sell the home. So this is where I've got a lot of gray hair, and it's because of this. Net profit loss regarding 171. So that was the address of 171. John Johnson. It's not the real owner. We changed this because we knew we were going to record this. I'm not just saying that. Who's named John Johnson? Actually, it's probably the most common name in America now that I think about it. Ferd. Should have went with Ferd Johnson. Nobody would have believed it. Anyway, back to regular programming. Net proceeds at sale. So when we sold this house, we got a check from 21st Mortgage for $12,503. Now that may make you think it's profit, but it's not all profit. Here's how we're going to determine it. So I'll look at that. So what do we have? Well, on the credit side, somewhere along the line, so at sale, at disposition, what do? We get cash, meaning we get the net proceeds, and we also get rid of the Hawthorne line of credit. So we pay off the OCL, other line of credit. That's why it's negative over here. So we owed 39,000 on this home. And then what do we give away? We'll give away the home. What did we have on the home? We had the big number. This is our basis at purchase, 39,006, which is why it's the same as line of credit. We borrowed money on the line of credit to buy the home. We paid for the rest of this stuff out of our checking account, which is why, well, except for this one. This one was on, that's the profit. Yeah, the rest of it we paid on in this property. Sometimes we put the other stuff with the improvements on the line of credit, but we had a bunch of cash in the checking account, so we didn't do that. We just used our own cash because it's really just, it's easier, and when it's all going to work itself out on the disposition date. We don't hold these things very long, right? We're selling houses several a month. Okay, so we're giving up our install. We paid $49.50 to install. Our concrete, we paid $5,050 for the HUD set concrete. That's 2 feet wide by 2 feet wide by 3 feet deep, which is the appropriate frost line in mid-Missouri. We transferred the skirting. We had $550 of labor for the skirting on this double wide. This is a double wide. This is a 28 by 56 true thrill, which is a 3-bedroom, 2-bath. Pretty nice home. I actually like True. A lot of people bash True, and I say, have you bought them? I bought 30 of them this year, and they work out pretty well. They're not the nicest home, but they're a value play. You know, some people are supposed to drive a Ford Taurus. Some people are supposed to drive the Ford GT. Some people are supposed to drive the Ford Fiesta. So not everybody gets to have the GT, you know, or the Mercedes, if you will. We transferred the HVAC. This is not enough. This says 1,006 HVAC. That can't be right, because HVAC cost us like $2,200. So that's a red flag. We got our HVAC over here at $2,583. So, Kristen, what is this 1,006 for a transfer of HVAC? That can't be HVAC.
I will drill down on that right now. Check, and I will look at that.
We'll look at that in a second here. Well, here's how we figure it out. We'll jump over to, we go reports, financial statement. We'll do our balance sheet here in a minute. But our unit balance sheet, we'll just do PandL today. It's going to get too messy. I'm going to drop down to Belton Homes, unit 171. I'm going to run it as of today. And if it's done correctly, we're going to have 0. Boom, it's done correctly. There's no home because we don't have the home as of today because we sold it back on 10/5. So now I got to run my unit balance sheet. I'm going to run it on 10/4. And it should show us exactly what we have for that unit. And what do you know? We got mobile homes owned. That's a classification we made up, 1505. What did we own? That's how much we had. That's our cost. Okay, so we had 39,000 at the line of credit. That was the acquisition. Our cost was 50,000 and change. And that was our net cost actually, because we received a down payment in advance from John Johnson. And we got our deck wood, our wiring for our mobile home install, KC Masonry, they're the concrete guys, Home Depot. That would be some of the electric wire install, miscellaneous stuff. We don't have a unit attached to this one. So Kristen put a note in that for, this is not a check, a debit on August 6th. We paid labor, 300, 550, 657. That's for, we do the electrical install ourselves. So that gets pretty pricey, but it's cheaper than hiring somebody from the union. We do the electric. It's 200 amp house. We run 60 feet underneath in conduit, dig it in the ground, all that kind of stuff. Newcastle installed this home, $49.50. Skirting.
That's going to be our number.
That's our number. Skirting 1,066. So we found it. This is how we cross-check, guys. Every deal, every month. So that's not the transfer of HVAC. That's transfer of skirting materials. We also have skirting labor above that, and I know that's the number because the Brian charges us $550. So I'm going to save this at the bottom, but I'm not going to close it because I'm still tooling around here. So you can see this is where the errors can be found, and I'm super paranoid about ever putting an error out the door. I used to have a boss and said, speed is important, accuracy is imperative. If it's a penny off, it's not close, it's wrong. So that's how we run the shop. Skirting, AC, that's right, 2580. That looks like a number I should see for AC. AC is pretty similar. It's like 2250 to 2600. There's a little bit of difference per home based on the size of the tonnage. This is a big double, so we probably got a 3 ton in here instead of a 2.5. The manufacturer specs will tell us that. That's building the deck. That's deck labor. Royal Supply, I don't know what that is. It's different than skirting. We would have allocated, that's, I don't know what that is, Kristen. Oh, that's for the steps, probably. We've got steps in the back of the house. And then we paid APM $150 for miscellaneous repair installation. That should have been a reimbursement for check 1265 to old Tyler. Okay, so very granular level accounting here, which is why I'm hiring Logan, so I don't have to do this anymore, among other reasons. Okay, and we can reflect the down payment of 64235. So that, let's drill out of the unit general ledger, get back to our unit balance sheet. Mobile homes owned, we had a line of credit. Okay, so we already fixed this problem on the 1066 because I knew that wasn't the right HVAC, it was too cheap. Okay. Home Depot supplies, we allocated 455 to Home Depot supplies. It's mostly conduit and electrical wiring. Okay. HD miscellaneous, that's all the, that's, gravel, 2x4s, wood, that's generally deck wood. This one's that big, 900, generally a deck. This is a double. We typically put 10x10 wood decks on the doubles, 8x8 on the singles, bigger decks on premier lots or corner lots, or based on if the buyer wants it. In this case, we didn't know who the buyer was, so we just put on, we budget our standard deck. Most homes we buy spec, and we then sell them once they're up and running. That deck's going to cost about $1,000 in wood. Nowadays, a lot more with all the COVID fiasco, but for probably $1,500. But then also we pay all Ben deck labor, which is built in here. We've got it under miscellaneous labor because she did this for ease, but I know from the unit balance sheet that it's not $657 for the deck. Where's old boy Ben? There he is, $450. I pay him $450 to do a 10x10. So I knew that wasn't the right number. Okay, so back to journal 1005. Here's the tough part. We recognized the debited, we got a fixed asset when we received the down payment. So we basically said, hey, look, we received cash. I don't think this is supposed to be 1505, Kristen. I think it's supposed to be checking because we received checking in there. Do you concur? We just tool around with this in place. So that's a checking there. And then
I don't, for the reason that is like that is it's not going to be checking because we have already done a journal entry that reflected the deposit.
Okay, well, let's see then. When Chris and I have this discussion every month on these are the contents she's already done on this one. I'm going to show you guys at home where we did that. That makes sense. Here we go. There's John's wife, Kim. She brought the check in apparently. And here we got the checking positive. What did we get that day? I said, we debit. We receive cash. We give up part of the home. We lost part of the home, because we essentially gave away rights to the home in exchange. So we had a loss of 1505, the mobile home. We still actually own the home. But then upon sale, we clean that up. We do this. We then, that's why Kristen's right, this is 1505 on the debit. We then get the home back because we then recognize the down payment here as a credit in 5004 so that it evens out so that we properly can allocate our net profit, which is the delta. So in this case, we also transferred the HVAC at sale. So we paid for the HVAC earlier, so we get rid of it at sale. So at the end of the movie, what do we have? We have zero house. But if we have zero house, we got to get rid of all the ancillary things like the deck, the skirting, all that, and we give it to old John and Kim. And then in return, we look at our net proceeds, which in this case was we had 12,000 and change, but that wasn't profit because we'd already paid a lot of this in cash. So we then allocate whatever the delta is, and you have to get it right. And I'm here at the bottom. See these numbers? I'm going to save this. I'm going to try to change this and say my profit loss on this transaction. I'm going to try to say it says 5568.05. So 5568.05 is my number. If I change that to 5,000 and I go to save, it won't let me. Look, it's all jacked up. It's not balanced. We're off. So I have to get it right. But you can get it right, by cheating, so to speak, and put it in the wrong category. That's not a good idea. And that's pretty much how this one works. So I'm going to get out of that journal. I'm going to get out of 171. I'm going to go back to my ledger, and here's some other down payments received. Well, that's one we just referenced. We already said she was just ahead of me. And then let's look at journal 1032. This is Doug and Judy Johnson, their family. And we're going to go through the same machinations to figure out if this is accurate or not. Okay. what do we get? We got net proceeds of sale. We got cash. Why do we have two of these, Kristen? We have two net proceeds of sale. We should have only got one check from 21st. That was not rhetorical.
We had two, it was two separate deposits into our account. It wasn't just one, it was made in two separate.
Okay. I'm not sure why. Austin, do you know why?
Yeah.
Did they give us part of the money down payment? No, this isn't a closing.
This is for
128.
What are the numbers on it?
This is actually money we received from 21st. It's 2,587 is one of them, and another is 4,994. That doesn't make sense.
I don't know. I don't remember getting. I would have to look at what the actual down payment was.
No, but the house is 46,000, so it's roughly 46,000 plus.
Yeah, I think the
4,994, that would have been it, because plus sales tax would be like 3,200, so you're at 49,000. So this is the down payment. So that's what this is. This is the down payment, I think, Kristen. So let's go run the unit balance sheet for 128. Let me see the day of this journal. We sold this home. Uh-oh, we got ourselves an error. No, wait, it's the 8th. You're okay. That was dated 10/4 from the last one. I'm going to change it to 10/8. Let's just look and see if it's right. Let's do it, 10/31. It should be 0 house because we no longer own the house on 10/31 because we sold it on 10/8. View report. No house. Looking good. Okay, now let's go back to 10/7 to reflect the day before we sold the house to see if we got ourselves a house. We do, 29,000. So we got checking. Let's see what's in the checking. Receipt of down payment, $1,000. Receipt of down payment. Oh, did they pay a big down payment? 10,000 instead of 10%? Austin? I don't remember them paying that kind of.
Which house? Is this
128.
No, they did. They did because they sold their house.
Oh, yeah. Okay, well, got it. Okay, well, that's rare. So normally we've got he's got 10,000. Okay, so that makes sense. So let's look into our mobile homes owned. This is stuff we paid. We received 1,000. Oh, yeah, they put 1,000 down to hold the house. That's right. And then later they sold their site built house and they gave us 10,000 down to make their loan smaller with 21st mortgage. Okay, that's great.
That's right.
Now, we happen to pick the complicated one here for our viewing audience.
That one was stretched out over time. Yeah.
So this is just coincidentally like right about what 10% of their down payment is. That's what threw me off. There's the down payment. So on this one, we are doing the same thing. We recognize the down payment. It's a debit, mobile homes owned. We're giving away. This is all profit at this point. At that point, recognize 10,000, but then we get to the delta here, 3,105, and we back into that number. So this is the true profit on that home. 3,105. We back into that by adding up all the rest of it. So if I make this 0, it's off. But what have I done? At close, I got the net proceeds from the bank. I paid off my line of credit. Those are all debits. I got the down payment. I gave away the house and all the ornaments on the tree. So what happened? I gave away. I credited. Gave away more than I had. So the delta here is. I'm going to just cancel that so it shows back up, is 3,105. So that's our net profit or loss. As you can see, I gave away more than I had. What does that mean? I lost. So in this house, I lost $3,105. Well, that ain't no fun. How'd I do that? Some of it could be, this is part of it. The concrete was high on this one because there must have been other concrete in the way. Which means you got to dig it up and throw it away. Normally concrete's like 3,600 for a single wide. So there's 4,075. That's part of it. Deck wood, transfer of deck and miscellaneous make ready there. Yeah, really, I think we just probably, we lost it a little bit. These probably sold for a little too cheap, to be honest. Part of that's because we were advertising them at 46, and then once COVID happened, not 21st. The manufacturers all started jacking up their prices because OSB, the plywood, went from $4 a sheet to $17 a foot. So these houses are more expensive. At least that's what they're telling me as I watch my home sale profits go down. So anyway, that's the unit balance sheet. That is the most complicated part of Rent Manager on a unit balance. And then we do the balance sheet. Those three, so I'm going to consider those audited and done. We've already gone through the rest of them. So Kristen, you can save these and we'll go from there. I'm just going to send them to me via email and you can label them. That was, excuse me, homes, B homes, L. Send that. And then we go to the land. I already sent investors. Nothing from our transactions there impacted this. Actually, I'm gonna scratch that. I'm gonna refresh these because some of those changes would not have been reflected on the main sheet that I just sent. I think they'll email the right one, but just to make sure, I always refresh it. This is going to be B Homes, I'm going to call it 2.0 so that I don't get them confused with the other email. And then B Land, I'm going to email that. You can save them and export all these. You can export them. Probably getting too much into the weeds for today's lesson. I'll show you a couple more functionality. I'm not going to do I'm going to exit out of that. And I want to do a balance sheet. You just saw the unit balance sheet. I'm going to do the balance sheet. I'm not going to do investors because this got people's names on it who are my investors, some of whom may want to be nameless. So we'll just do Belton Land and Belton Homes for the viewing, unless you guys all close your eyes. So Belton Homes, here's our checking, note receivable, undeposited funds, pass-through, loan origination, investment into the land. I just look and see what's missing or what's inaccurate. Other receivables, equipment, machinery, mobile homes owned, improvements to land, that'd be like our playground. Line of credit, we got 10-year loans with Hawthorne Bank. There's a bunch of little transactions in here. Each one of these is a journal entry. This is a pain keeping them, but we've got these homes on fixed 10-year fully amortizing mortgages with a local bank. Again, because they're cheaper than 21st mortgage. Lots cheaper. And then this is the mobile home loans. We have the line of credit that I mentioned. At this date, we had 184,000 line of credit. That's probably 4 homes outstanding. And then we got security deposits. That's a big security deposit. What the heck is that? Oh, it's for all the homes. Duh. We're looking at the homes. I was looking at those investors. We got a bunch of tenants, so we got a security deposit. We require a double deposit. In Missouri, you can do a double deposit. So if you're a renter from us, and it's $900 to rent. It's going to cost you $2,700 to get in the door. So we got a lot of deposits on hand. I've got due to Belton Land. That was for initial journal entry upon purchase because we purchased the land and the homes. We allocated $244,000 to purchase 2 homes. And that's basically an owable, a note payable to the sister entity rather than transfer them at closing or commingle the funds, which you don't ever do. Investor capital account. That's pretty much it. I looked for here. There's nothing. Sometimes I'll see on an error where under the checking it'll say like APM or custom property management, which it shouldn't be showing on this property just because whoever entered the check did it incorrectly. Belton Land, look through here, same jam, nothing out of the ordinary. Equipment, machinery, real estate land, real estate improvements, real estate goodwill. I got a loan of $985. How you like them apples? What did I say this was worth earlier? Like 4.2 million. We owe $985. Pretty good work for the last. Okay, I'm right there. So guys, today's episode is coming to an end because my wife has to leave and she's got a doctor's appointment. I'm on kid duty. So I think we covered most of what we needed to do. I'll do another episode where we get into more detail on some other topics. I'm gonna stop recording, and unfortunately, no questions for you, for anybody else. Bye now.